Good morning. So yesterday was what we anticipated. Traded going nowhere, right in the middle of the range there. Caught between the pivot highs and the pivot lows. I mean, it didn't even fill the gap. It was a go nowhere kind of day for the broader markets. So now coming off of the low and pulling back to these pivot lows. So essentially, we had a little trading range going on within a bigger trading range, and that's been the theme in different markets, which we've been talking about for a while now. And so as we go into tomorrow, we'll see if things can break one way or another. They're starting to look like they're going to break lower. I mean, we could have broken lower back here and didn't. And now we've got, you know, it's pretty much like a measured move. The good thing is all of this congestion here, 3 weeks, got a pretty solid support area down below. So, I mean, whatever's going to happen, we got this major support here, which let's see, we went right on top of it there a little while ago, bounced off of it. And you can see this head and shoulders. We're talking about this, you know, kind of like a big complex one, I guess you could say, looking at it that way. But if it breaks here, we'd anticipate it. And look, the 50 MA moving averages is subjective as reference points. In indices, you got so many people looking at them. We call it can become a self-fulfilling prophecy. So you got to know where the main moving averages are on the indices. But this isn't lined up with anything. There's just a giant unfilled gap here. So breaking this support level on a closing basis would give us a bias that it's going to come down to this major support level. And we'll just have to see how this plays out. We're still within the big trading range. Oh, it is what it is until we break one way or another. And you see the little bounce here as it came down there. We'll see how far this gets. And the spiders, not as well. You don't even have the head here as a new high failure, but you can see the topping pattern, trading range. It went nowhere yesterday. A little unfilled gap there. Let's see where it came down to. Yeah, it came almost down into it. Didn't quite hit the close, but close enough. I guess that's a good sign on a short-term basis that buyers stepped up before getting down to these two pivot lows. Right down here, kind of lifting up a little. But same story, just caught between pivot highs and pivot lows. Moving averages are rising, major supports down here. So the Qs are showing some relative weakness where they were showing strength before. I guess, Apple in part is a big factor in that. But so again, a big support level, unfilled gap here. And we'll just have to see how it plays out. SPX, as the markets are lower, the strikes move lower. Let me just go back and look where this is at. Since SPX doesn't open up, I close. All right. So I think it's going to be more of the same, iron condor type of situations. I mean, prefer to wait for things to move one way or another, but they're not moving too much. Um, it's tough when the ranges get tight versus when there's a relatively large move and the strikes move so far away, we call them no brainers. But with the news coming out tomorrow, odds are things aren't going to move too much. Yeah. So, that's below the 20. That's good. There's a pivot low right there. So it's what I call where your lines of defense. And pick either one. It's like the best guess scenario is which way they're gonna go. But there's some weakness in other markets, which we'll take a look at. Transports coming down 200 MA. So again, we were talking about bigger trading range, right? The bigger trading range and the smaller trading range within it, and prices have come down to the bottom of the trading range. And 200 MA there, pivot lows. Our assumption is it's going to attempt to hold. And it's probably a good index to keep an eye on today, or set an alert down below here to see if it breaks below. There's another pivot low down here, a couple of pivot lows down there. So, I like to set my alerts. If they don't get there, they don't get there. If they do, because I'm not always looking at this index intraday. Most of the time, I'm not, unless there's stocks in there that look of interest. So, JBHT mentioned in the green room yesterday, that was coming down to 200 MA. Exactly right there. So, and it's got these pivot lows. So this, you can see the head and shoulders top and the break, and coming down there again, the 200 MA is pretty close to aligned with these pivots, but as prices fall down to a different level on a short-term basis, they're likely to bounce. So, they're starting to get talk about recession and in the inflation situation, the Fed backing away from the anticipated cut. And we looked at commodity prices yesterday in ags, and you see how they're going up, and deterioration in transportation stocks is a good precursor to the recession. And so we'll see. And if that's going to in the cards, the markets are going to move lower, but still early. Maybe they can pull a rabbit out of the hat, but we'll just continue to monitor that. Semiconductors, talking the rising 20 MA right there. Was it Micron was upgraded when they raised their target level. So that had gapped up. That didn't hold up. MU, AMD, they all moved up and didn't get very far before selling came in. Where is this? At that pivot low, you see the cursor on the hourly chart. So the question is, does it double bottom here and try and move up, or does it keep moving down? We just continue to monitor. There's a little unfilled gap down here. So we mark off these reference points and see what happens when they get there. Retailing been holding up pretty well. Got my alert under there. Interest rates, up at resistance. So this is maybe a good thing on a short-term basis, that interest rates have moved up from down at the bottom of support here, which we talked about last week, to look for the turn. It's up at resistance. So it's stalled. If it moves down, that maybe put a floor under the markets until tomorrow. But you want to keep an eye on this to see if this 10-year here breaks up above that level or not. Again, set an alert. We got that wide range bullish bar, and that's not a good sign either. So, we've talked about this in the past about interest rates going up where things aren't really doing too much. And why are they going up? These inflation concerns. Well, because if there is inflation, while, and a possible recession, which seems like there already is, depending on where you look. But anyway, interest rates go up if the economy is growing. Okay, there's a big demand for money, which doesn't seem to be right now, or lenders really don't want to lend, and they want a higher interest rate to lend that money. And so this kind of is more alignment in the latter when we see the other signs that we've been talking about. So set the alert. The dollar, that's up big, yes, in part. Let me just see what the euro is doing. I know the yen is down on Japan interest rate increase to zero. Kind of funny. Euro's down. Yeah, but in a trading range, that this bullish move up, it took out these pivots, and this is pretty normal. I mean, it kind of surprising, a little bullish, I guess, that it isn't down deeper because as a country raises interest rates, its currency, well, it tends to hold up. So this coming down like that, kind of odd, but you know, it's down as it is. But you can see this double bottom down here. We'll see. I mean, if you trade this, you got to keep an eye on that and know what's going on with short-term interest rates. For futures, that certainly looks like, well, so far it's an inside day, but you can see that little top in the Qs, and if it breaks below here, that's the continuous contract. Let's look at the month. Sometimes they look different. Yeah, and you can see here that it's already broken, and it's looking, if it closes like this and then it starts to break tomorrow, it's got the look of what would be a measured move that would send it down here. So right now it's just an inside day going nowhere. These pivots, and we'll see which way it goes. S&Ps, you can see the rounding top that's forming. And one of the things that I learned many, many years ago with these topping patterns, especially ones that's relatively large and they look like these head and shoulders patterns. That isn't a great textbook kind of a pattern, but over the years, you see certain things that are big in magnitude. And this goes back to maybe 1993 when this was, Dell was a public company and then they went private back. And I remember reading articles in Barron's about how bearish it was. And there was a big weekly head and shoulders top and all this bearish stuff that was going on. And it broke out above that. And it taught me the magnitude of pattern failures. And so, that's something that is stuck in my head over the years because you recognize these patterns, and something we're going to be talking about tomorrow in MT Live, events that predict moves or, lead to moves. And that was one that was gigantic because at that time, when it formed that big head and shoulders top and failed, Dell made the most monster move to the upside. And it was about their laptops and, was all this big bearish story, and the pattern was in alignment with it, and it failed. And so it just, you look at these technical patterns that create beliefs, and that's what they're supposed to do. That's what pattern recognition is about. You see double bottoms, W bottoms, M tops, head and shoulders bottoms and tops, and you see what they did in the past, and that creates a belief that what's going to happen in the future. That's all well and good. But when it fails, you need information that gets you out of the past and what's happening in the present. And then those pattern failures suggest what's going to happen in the future. So you can't get too stuck to your bias when information is out of alignment with that. And it's an important thing. And it's one of the reasons why so many don't adhere to stops, especially at the beginning, because you become inundated with these candlestick names and, different things that you learn. And it's like, oh, human nature wants that to happen again. And of course, we do, because that's how we make money. But hey, when things change, if you don't roll with it, you're going to get clobbered. So anyway, a lot of going nowhere. Look at the weekly chart. Closing prices. Look across that for a month. The closing prices are almost exactly the same, getting stuck here. So it's building an area that's going to either be a launching pad higher or a launching pad lower. And when you got that much consolidation going nowhere, it's creating support and resistance levels above and below, and recognizing that. And what's happening now is nothing, but we're waiting. But the extent of the move that we've seen since the end of last year to now, and momentum stalling, leans more toward a correction. So far, the correction has been sideways through time versus price. But tomorrow's event of the Fed chair's talk is going to lead to movements one way or the other. And again, based on commodity prices going up, which take a look at crude oil. It's up again today, broke out above these levels. And so that looks like it's going to go higher. So you got crude oil going up, transports going down, commodities, ags going up. All of that suggests more inflation. And what's the Fed going to do? They're not going to lower interest rates. And if they even make a murmur about having to think about raising, well, I think we all know what's going to happen. I'm getting a little long here with this talk, but gold is strong. The Russell is weakening. You can see where that is. So, that was a great sign at the end of last year, and it looked like it was going to go higher. And now it looks like it's going to go lower. So that's another bearish sign. And the interest rates, gold is going up, silver. That looks like they're going to go higher. Bitcoin, that's having a correction, no big deal. And Ethereum, that's coming down pretty damn hard. That looks like it's heading down toward the 50 MA. Well, I think dollar, gold can stay strong. With the dollar, raising, you would think otherwise. But look, with a pattern like that, you can't go against it. So again, we've got so many different markets. Well, that's not going anywhere, but we got so many different markets right now waiting for the next shoe to drop, some next piece of information, that it's tough to make a call. So when you can't make a call, you don't do anything. That's the bottom line, intraday trades, credit spreads. And so we'll see. All yours, Dan. It took a little longer today.
Good morning. Well, that was perfect. I was slowly grinding up a little bit here. So, yeah, range bound, not in a hurry to do anything. Oh, Greg, your MTUM alarm just went off. MTUM. Let's see what other alerts going off here on opens or things of interest. SYY alarm. Nothing to do. We entered that yesterday. D-Dog alarm. Gapping down. We have this as a call spread. And today's Tuesday. So under Friday's low, call spread, bearish and consolidation. That's good to go. Nike, we're short already. Low alarm. I'll be looking to tighten the stop on that. And that's it. On NVIDIA here, I think is dragging down the semi. So, I haven't been following their whatever conference they were talking about, some big shindig with they're announcing their new chip. And I said yesterday pre-market, I had an alarm at 890 because then it would negate yesterday's bullish gap. Now it's gapping under this consolidation. So this is a beautiful all spread watch. And I would say our three, yeah, exactly right. I'd say my three favorite extended stocks that we've been stalking to sell call spreads on because of asinine high premiums is NVIDIA, SMCI. This one's more of a bearish crack, particularly with yesterday's bar. But look, they're climbers daily, weekly, monthly. I mean, this is a picture of greed. And it's the end of the short-term run. So we were selling insanely high yesterday. What number did I say in the Greg? You remember? We were talking about selling the 2,700 calls on Mister yesterday that expired Friday. That is insane premium. And I sent a text alert to our subscribers. I didn't make it official, but I'm, leading a horse to water. If they want to do it on their own. That's a nice 180 reversal from a Climo. Now it's gapping down with Bitcoin. Alex, Bitcoin is another one. Buy the rumor, sell the news. I mean, this, and do you remember yesterday pre-market, I talked about the contrarian indicator with the CNBC guy saying, well, he was talking about Nvidia, but so many people have been parading on CNBC lately, talking about Bitcoin, going to the moon, this halving, and a bunch of nonsense, whatever. All right, Cal here had earnings gapping down. If it weren't gapping down, then this would have been a buy over yesterday's high. Nice. This is what we call ask Debbie how to say it properly, an ascending triangle. Look, here's your momentum breakout, higher pivot lows, horizontal resistance, and it breaks out. But gaps must have CNM gapping down. This could be a day trade short. It's extended all time frames. Beyond, I think, had a secondary offering or whatever. So you know what I did? Set an alarm at 8:30. Why did I do that? Well, because if it goes off, this is a bullish turn at the 20. And it'll negate the gap down. Sam, I am SPR alert. This is a buy setup with a 1, 2, 3. Let's put that in this little window. IFF. There's no pattern, but that's quite an impressive. Look at this crazy moves. Gap down, up, new low, new high. Wow, that thing trades crazy. NCMI, I think it was either earnings or news. Bullish gap, but gap's too big for me. UA, I forget what the news is, but I set an alarm at 7:01. Why? Well, because it's a Climo, bottoming tail, and 7:01 is right at the top of this 15-minute resistance. So I'm going to ignore it unless my alarm goes off. If it does go off, then we got ourselves a long candidate right there. And there's another one with the CEO. Hertz. Hertz. They booted the CEO because of him trying to cram down the Green New Deal EV cars, and nobody wants them. That was a week ago. Alex, you're dropped down. But yeah, Hertz right here is in trouble. Let me type these out. Aichi. Let me go through the rest of these earnings and news, whatever. All right, Stone, that's an ugly gap. If this cannot bounce, then 30-minute low, short idea. TFC is opening flat. It's on major support, but there's really not a potent turn, but we'll come back to it. DLO gapping down. Is that the one I just said? This 67.77. So it's gapping down here. That could be a call spread candidate, 30-minute low. AZN call spread candidate if there's any juice in the video we know about. Madogal, I forget the news, might have been secondary offering, I don't know. That's a crazy looking pattern. 30-minute low though could be if there's any juice at the 300 level. These are just miscellaneous stocks from yesterday. SKWD is a bull rectangle, daily, weekly. Here's my big old momentum move, and it's in a rectangle consolidation. Not that hard, is it? You teach little Johnny that. STC low alarm. Okay, Sam, this was yours. I said target low 58s. This could be a 5-minute low idea. Let me put STC there, bottom right. RTX up alarm. We're long this. Let's just sell half, right? Or just sell a third right into this gap up. Third or half, it's a judgment call. See, that's why, I need my alarms, or and then you got one hand behind your back without alarms. I didn't know that. Free market. I didn't see any prints up there. $94. Actually, I had a first target, but we actually exceeded the first target on that gap up. All right, thanks, Neil. Yeah, I did not have an alarm on ECL, but that's good news. Alcoa gave it up. I was watching that from yesterday, so I'm gonna take my eyes off it. ECL. Yeah, yeah, it's fine. Look at this SPR middle chart here moving. We talked about it yesterday. I don't expect a new high, but this looks like it can go up for 1 to 3 days.